Alrighty, well, this is class 3 of the ICT 2022 Mentorship Remix. So we're gonna start with Tuesday because there was we had like Tuesday we had several solid opportunities on Tuesday for the model, and then I believe Wednesday as well, if I'm not mistaken. We had a couple more setups for this specific model. Okay, so we're gonna start with this ES right here. And the exact date for this is January the 16th. January the 16th, 2024. Okay. So, if you're watching this in the future, you can go back and, pull this up in your charts with me, and you can kind of follow along with me, right? So what we're going to do here, guys, is we're going to start on this we're on a 4-hour chart here. We're on a higher time frame chart here. Okay. And we need that higher time frame perspective. Okay. We need to understand, because as I've made very clear thus far in this series, trading this model, the ICT 2022 mentorship, is not just looking for some random displacement, like looking for some random fair value gap, like looking for any old higher low to get taken out, and then looking for some random fair value gap, and then trading what you see on that lower. Like, it goes deeper than that. You have to have a full understanding, as I made very clear. You need to have a full understanding of liquidity, okay, and market structure, of course, as well. And this is what we're doing. So we're having this top-down analysis, and we're working our way down, and at the end, it's gonna form a trade idea, and it's going to connect perfectly. Okay, so ES, this thing's selling off right here. Look at my cursor. See how it's selling off right here? And what did ES do right here? Coming into Tuesday London session. And again, this is on Tuesday, guys. It came down and it took out this. You see this right here? See that right there where my cursor is moving back and forth? Lowest low in the middle, higher low on the left, higher low on the right. That makes that what? A swing low level. What is resting beneath swing low levels? Sell side liquidity. So, and being that this is on a 4-hour chart, this is a higher time frame sell side liquidity pool. Okay. So what we saw here coming into, again, London session, we see price come down here and take out a higher time frame liquidity pool, aka higher time frame support. Okay. And in the process of doing this, we left behind some other key points of interest that we want to be aware of here. We left behind a bearish imbalance. Why is this important? So why do we even note this? Because this is an inefficiency in price. We came down, we took out this liquidity, but then it left behind a bearish imbalance. That is an inefficiency in price, because it was like, think of it like this: price was too fast, it was too extreme, it was too explosive on that first move lower, and it did not get a chance to efficiently deliver that price action, which in return leaves an imbalance in price. What do we know about price? Well, it ain't going to want to leave it like that. Okay, where there's inefficiencies, there's opportunity, because price is going to want to efficiently deliver that price action. It's going to want to rebalance in that price action in the near future. Okay, so we have that perspective already on the higher time frame chart. We're doing the work on the higher time frame chart right now. We have these key points of interest, and it's going to be useful information later on for us when we go to the lower time frame charts here. Okay, so we have that. We also have some equal highs up above. Look how we got like this super clean level right here. Look at my cursor. What do we know about equal highs? Well, we know that's going to serve as a draw. Very, very clean level right there. And then even right above that, guys, we have what? Yet again, we have another imbalance right here. See this? Same exact deal. This push right here was too fast. It was too extreme. It was too explosive, and it left behind that imbalance. And then we have higher time frame buy side, our next higher time frame buy liquidity level right here. So I have several key levels noted on this chart already. On the 4-hour chart, I've already done a lot of work on the higher time frame chart. I've identified what? I've identified we are coming down, and we're taking higher time frame sell side liquidity. We're in a deep discount marketplace when we're taking out this level right here. Why are we in a discount? Because we're taking out a higher time frame level of support, guys. And when do we go into a premium? As ICT teaches, you take your Fibonacci, and because this is a price range. Whenever you get above 50% equilibrium, it's when you enter a premium within that price range. It's so around the area where you come up into this bearish imbalance, that first bearish imbalance right there. So we understand this. On the higher time frame chart, we're taking out higher time frame sell side liquidity, and we're left behind an imbalance in a premium marketplace. Price is going to want to revert to a premium here in the near future to rebalance into that price action because it's cheap right here. Okay, it's having a big sell-off, very bearish sell-off, but it's also in a cheap marketplace, and it's going to revert to that imbalance here soon. I've done the work on the higher time frame 4-hour chart. Boom, I have these points of interest. I have them noted on the chart. Now, on this particular day, we actually had high impact news at 8:30. So as I've already taught you, there are a couple times where you want to be hunting. You want to be hunting right after high impact news at 8:30. That's a key time that you want to be hunting. But also, of course, you know, the equity belt after 9:30 until about 11 o'clock a.m. Eastern time. That's the time where you really want to be hunting. So, but on the days where you have news, if there's no news at 8:30, well, then you would just start hunting at 9:30. But if there is news, okay. Oh, I mean, could you trade this model in London? Yeah, you could. I know that, of course, there's people that do, but that's just my advice. But on the days that there is news at 8:30, that's when you start hunting after that news is done with. Okay. So now we're on a 15-minute chart here, and you can see now we still have these imbalances on here. That's noted from the 4-hour chart that I had. We got the imbalance right here. We got the imbalance right here. Those 4-hour imbalances. And again, that's a higher time frame level. Now it's just displayed on a 15-minute chart. So here's 8:30. Let's find that. So not all the times, but a lot of the times, what we'll find, the first move that you see from news, many times, not always, but many times, is a fake run. Okay? That's a very common signature that you'll see from news. Is the first move that you see a lot of times is a fake run. Just like what you see with London session. Okay, you get your Judas swing in London session that puts in the higher low in the day. That's like the same deal, but on a smaller scale here from news. Just like you get London session, the Judas swing puts in the lower high, or just like 9:30, whenever you get a fake run there. A lot of times, like the first move out the gate at 9:30 is a fake run. You see the same thing after news a lot of times too. Is that always the case? No, guys, this is trading, and nothing's like 100% in trading. It's like this isn't like that's just not how it is. But it is a common scenario that you'll see a lot. So you can see we open up like 8:30 right here. Look at my cursor. This is where this candle opens up right here. Look at my cursor going back and forth. See that? Like right here is where we opened up on 8:30. Okay, and I want you to notice something here. We already took out this sell side right here. We purged that sell side in this move low right here. We took that low. We came down to the imbalance. It took that sell side. And now we're coming to 8:30, and the news presses this thing up right here. The news presses this thing up, and it does what? It takes out buy side liquidity. How do we know it's taking out buy side liquidity? Because it has a swing high right here. Remember, as ICT teaches in his series, what do you want to see for the liquidity run? That 15-minute old higher low, right? There you go, guys, right here. You have a 15-minute, look at it right here. Highs in the middle, lower high on the left, lower high on the right. You have a 15-minute swing high right there. That 15-minute swing high right there, it took that level. It took that liquidity. Here's the thing. Right after 8:30, which is a key time where we understand that fake runs are going to be taking place. Also, another thing. Remember that imbalance we were talking about? So we got this push up right here, right? We got this push up, and it came down and took out this higher time frame sell side like we were talking about earlier. Okay, so it's in a discount marketplace. But remember, we have these imbalances in a premium within that 4-hour price range up here serving as a draw on liquidity. It's going to revert to a premium up into those imbalances here. Okay? And that's exactly what happened right here. Like we literally came up into a premium right here on this push up, and we created liquidity in a premium marketplace right before the news, which sets up for that stop run. That's what it's going to want to do here. It creates liquidity in a premium coming to 8:30, which is a key time for fake runs, turtle soups. It's going to want to take that liquidity that it just created. That was the intention. Okay. So we have this point of interest. Like I didn't just now notice, I didn't just go into the lower time frame chart, look for some old higher low, boom, imbalance. That's, that clean and easy, right? Where we are taking that top down analysis, and we're actually framing this off that. Like we're actually building this trade idea. We're not just looking at the lower time frame 1 minute or some random old higher low. You can see there's more that goes into it. It takes an understanding of liquidity and all this stuff, market structure, etc. So we came up, we found resistance off that imbalance. It creates buy side in a premium, and then we get 8:30, boom. It comes up, and we take out this buy side level, that buy side liquidity that I just noted for you. At the same time, what are we doing, guys? Whenever we take out this liquidity right after 8:30, which may I remind you is a time for fake runs, turtle soups. That's where you hunt for turtle soups. It comes up and it also rebalances yet again another portion of that imbalance. Now, it doesn't have to rebalance. Here's a key thing. It doesn't have to rebalance that price action in one go. It's going to do it gradually. Typically, that's what's going to happen. It's going to do it gradually. It'll like rebalance it piece by piece because it's going to want to gyrate and seek, liquidity. Think of it like it's ping pong. It's like back and forth, back and forth, back and forth from these liquidity pools to the next. So it doesn't have to do it in one go, but it's still rebalanced another portion of that price action. That's yet again another portion of that price action that is efficiently delivered, that is rebalanced. Okay, so we come up. We take that high and we rebalance another portion of that price action right after 8:30, which is a key time for fake runs. Okay. Now, what we're going to do next is we're going to go to the lower time frame chart. Now, I believe with this example, if I recall correctly, I do think this was just an example with the candle close. There's going to be examples. Now, there was examples last week where it gave you the lower time frame premium or discount. There absolutely was, which we'll go over here in a little bit. Now, I think this specific scenario, if I recall correctly, because right here. So you can see, here was that push up after 8:30. Not the most explosive move, but we did have the news and it sent it higher here. Okay, it came up and it took out this high right here. Okay, so we took out that buy side I was just talking about in the 15-minute. And at the same time, it's coming to that higher time frame imbalance. And you can see what do we got right here. What's that? There's your signature. There's that lowest low in the middle, higher low on the left, higher low on the right. Okay, we put in that short-term low and we come up and we make a new high right here. It's looking very bullish. It's looking very strong. That's the intention. That's the intention. Because what's that going to do? It's going to create liquidity, of course, but it's also at the same time, it's taking out buy stops right here because you have shorts that are in this who got in short because they see this big imbalance. They see the resistance. They see all this stuff. And you have this move lower off that level right here. What is that doing? It's creating liquidity. And that's another big reason why you don't take positions before news, because it's essentially just creating that liquidity in a premium marketplace. And then we understand that news is a key time for turtle soups, key time for manipulation runs where it's going to want to take that liquidity. See how it all connects? Like it's not just some little high or low. Like there's more that goes into it. Yeah, I have a full understanding of liquidity, time, etc. And we have this push up right up into that imbalance, right up into which is a level of resistance. May I remind you, it pushed up into higher time frame resistance. It pushed up into a premium, and it did find some resistance right there. But we have news that's coming up, which is going to, and we created liquidity right before news, which we already understand is a key time for fake runs. Look how it connects, guys. Look how it easily connects, and boom, we come up right after the news and we take that liquidity, and then we rebalance another portion of that price action. Now, this goes back to one of my quotes, and I'm sure you're very aware of: wait for liquidity or you'll be the liquidity. That's how you wait for liquidity. You understand where other market participants are at. And this is the way to go about doing it, because we understand that it did come up to resistance, and we understand there'll be a big bucket of shorts right there off that resistance, but we also understand there's news coming up. And we also understand that that is going to be a target. We wait for that liquidity, as we were doing, as I talked about in chat with my mentees on Tuesday. Plug this chart right here, this exact fucking setup right here. It took that liquidity. It comes down, this short-term low, strong close, boom, right here. Very bad. Now, this is one of those examples where it did not give the premium. And there was, as I said, there was examples last week where it gave you the premium. As I was telling my mentees, I still like this for a short, even though it didn't. It's up to you. Again, this is a remix of the ICT 2022. It's not the exact ICT 2022. I'm just like, this is like how I look at it. Yes, it's like, because in regards to the entry pattern, right? Think about this. If you got in, because this is confirmed at this point, bearish market structure shift. It came down, it cracked that low, closed, boom. And then you get the fair value gap confirmation. Look right here. Look at my cursor. 1, 2, 3. 3 candles make that fair value gap. Once that closes right there and you come into 845, it's already confirmed bearish market structure shift. If you wanted a premium, you could wait for the premium, but of course you would have missed it. You would have missed a trade on it if you waited for a premium. And there's nothing wrong with that. There's nothing wrong with that at all. But as I was telling my mentees the other day, I like it for a short, and it gave the really good risk reward as well. Because if we were to say like you got in right here, say like as soon as you got that confirmation, right, you marketed in, you would have been like in right there. Where could you keep your stop? Where could you keep your stop at on this? You keep your stop above that high right there. The high that liquidity run, or the high the fair value gap, which is the exact area, or the same area at this point on this trade. That's where you would keep your stop. It's above the high that liquidity run, above the high the fair value gap. And where could you target? Well, if you're getting in on the candle close, then you're going to target the next key sell side liquidity pool. Where's the next key sell side liquidity pool? Major liquidity pool. We've already taken out that high right there, which is high of day. It's already taken out high of day right here. It's already pressed up into that imbalance right there. And it's giving you a lower time for shift. Where is the next key liquidity pool, guys? It's going to be New York session lows. When does New York session begin? 8 o'clock is where New York session begins. Okay, don't confuse New York with, a key time where news happens, which is 8:30. New York session actually begins at 8 o'clock. So this right here, which is that liquidity that we were just talking about a moment ago, or it is liquidity, it's sell side liquidity, but it was that absolute low that was formed off that pushed up off that resistance. And now we're pushing up, and we're taking out this high right here. What's going to happen? You're going to have breakout buyers that are all over this thing, looking for this thing ramping up. It's got a lot of strength towards it. So we understand there's going to be market participants down here at this low. There's sell side liquidity down there. That's New York session lows, and that is a key sell side liquidity pool. That is your next key sell side liquidity pool. So think about this. If you were to get in on that candle close right there, literally, not even wait for the premium in this case, get on the candle close, risk the high, target New York lows. Look at that, guys. That's 2.62. That's almost 3 to 1. All right, that's just shy of 3 to 1 risk reward that you get on that play. So you see what I mean when I say, like, yeah, you could wait for the premium, and it'd be, of course, even better risk reward if you wanted it. But even if you were to do that right there, and I'm not saying you got to shoot for a big risk reward, you could shoot for the low hanging objective as well. Like if you wanted like a set 1-to-1, well then of course you could do that, or a set 2-to-1, you could do that. It allows for that. Like you can see, you could shoot for like a 2-to-1. You just take profits right there, and it's valid based on the market structure. All right, because again, you got that draw right there. So you could shoot for that 2-to-1, like it's aligned with the market structure. Or you could just shoot for a simple 1-to-1 and be done with it and take profits like right there. There's nothing wrong with that. Or you could hold for the entire objective and get almost 3-to-1 risk reward in the play. So you see what I mean? Like if you go off the candle close, and even if you don't win on a premium, it's fantastic risk reward in the play. So that's why I was telling my mentees on Tuesday, like I still like it. And so it's up to you what you want to do there. And again, like you gotta like add your own twist to it, of course. Like this is what I do. ICT teaches the premium, the discount, but even these candle closes, because a lot of times it will go without you. If it's just super strong, for example, that draw is very strong. And if the risk reward's there, well, then by all means, there you go. There's the trade setup, because we understood that it's going to want to draw to this low here next. Okay, and that's what we saw. That was what framed that entire trade. See how it wasn't just like some little simple takes it owed high, imbalance, take every single one that you see, and it's just that quick and easy. We had like an entire thing that framed this trade. Like we already talked about the higher time frame. We already talked about we implementing time, implementing after the news, implementing all this stuff, and then it framed this one trade right here. That's what I mean when I say you having a firm understanding of liquidity, firm understanding of time, firm understanding of market structure. That's what it takes. Okay? And it's not complicated stuff. It's very simple stuff. I mean, if you're like watching it for the first time or you're not privy to this type of content, then of course it can seem like a lot, but you'll catch on quick to it. It's very, very simple stuff. All right. And if you kind of expose yourself to it daily, you show up every single day, you're studying this content, it'll start to click for you. Right. So that's what we got, guys. And again, keep in mind though, so what happens next? So we end up having a move lower later on, because you can see we end up having 930 right here. So 930, again, that's prime time for what? 930 equity bells, I was just telling you, is a prime time for fake runs. Okay? It's a prime time for fake runs. And a lot of times you'll see price move in the direction where it doesn't really intend on going. Again, it's simply to take liquidity. So we have this liquidity right here built in, and we see right at 930 it pushes up. Okay, because we have built-in buy side right here. It's already taken out New York lows. It took out New York lows, which is a key liquidity pool in this right here. So it takes out that liquidity. Well, guess what we got up right here? We got equal highs up above. We got that buy side. It can now take that now since it's already taken out this liquidity. And it's coming up on 930, which again, just like we had with this news right here, where it created that liquidity right before our key time where we see liquidity sweeps occur, 930 is the same deal. It created liquidity right here, right before 9:30 equity bell. It gave you an opportunity to capitalize on that trade setup right there. But then it's still, we got buy side. We get a new buy side liquidity pool right here coming to 9:30. What happens? 9:30, it pushes up, fake run, turtle soup, takes it to high, and boom, it gets it pushed lower. Now, I don't believe this gave the fair value gap confirmation. Yeah, so there's no trade setup on this. Okay, there's no fair value gap in there on this. And that's necessary. I can see it sold off. I can see it pulled up into a premium. It sells off, but no fair value gap, guys. So there's nothing there. Okay, be strict with your rules. Yeah, we got the candle closed, but we want that imbalance in there as well. So there's nothing right there. Now, yeah, they did a little bit later, so you could have went off the candle close potentially down there, but you can see it ended up selling off. Ended up again taking out New York lows and ended up having a really good sell off. And ultimately, it did what right here? Remember, we've already taken out higher time frame sell side. Okay. We've taken out higher time frame sell side liquidity, and have we taken out any higher time frame buy side? This is a very important detail. So we're taking out, we have that move lower right here. Again, this is after equity. We already got the fake run up right here, and now it's selling off, and it's taking out New York lows, and it's also taking out low of day, which is a big bucket of liquidity pool. And I want to remind you guys, that what this higher time frame is doing right now. We had that rejection. I want you to notice that rejection was off of that imbalance, that first imbalance. It moved up into a premium marketplace. I want you to really notice that. It moved up into a premium marketplace. It tapped up into the imbalance, and that's why it found resistance. Absolutely. Because that is again, it's a point of interest that we had established beforehand. And now it's selling off and it's taking out this low. But I want you to notice something here. We're still it's moving back and down in a discount marketplace, sure. It's taking out low of day, sure. But also I want you to notice how it hasn't taken out any higher time frame buy side either. But it has taken out higher time frame sell side right here, and it is in a discount marketplace. Notice that. It took out this low, but did this push up, take out any buy side in here? Yeah, it came up with the imbalance, found resistance. But now at this point, it's coming back down and it's taking out significant sell side. I want you to really notice that and peep what I just told you because it's important detail. So we see it doing that, right? It comes up into the imbalance. It sells off. It's already taken out higher time frame sell side, which is this, where my cursor's moving, this line right here that you see. It already took that out, but now it's selling back off here, back down to a discount marketplace. And it's doing what in a discount marketplace? It's taken out sell side, but also it hasn't taken out any buy side yet, any higher time frame buy side liquidity. And we also have another imbalance, and we also have equal highs up above, which we already noted as well on the higher time frame chart. Do not forget, we have another imbalance up above. Okay. We have equal highs up above, and it's not taking out any higher time frame buy side liquidity. It didn't on this push up. It just came up into an imbalance. That was it. And now it's coming down here and it's taking out significant sell side liquidity. Back down in a discount marketplace. Where's the next draw going to be? It's already taken out sell side right here. It's already taken out previous day's lows. Okay, it didn't take out any higher time frame buy side. And now it's taking out significant sell side. It's going to want to seek that opposing imbalance because that's the next draw. It's already taken out the liquidity down below. It doesn't need to move lower now. It doesn't need to move lower now at this point. It's taking it out. So you can see we end up getting the push up. And again, I know it kind of looks like I might be talking about this in hindsight, right? Oh yeah, the easiest played out now. I called all this in chat. On Tuesday, I called all this in chat real time in the 1% club. Okay, this isn't like a sales pitch. I'm not selling you shit. Okay, it's closed. No more members. Nobody's being let into that chat at this point. Okay, going forward, or until it's going to be a while. So I just want to make that clear. It's not a sales pitch. It's just saying that I called this. I'm not just going in here hindsight and say, oh, look at this. Now that's a draw there. That's a draw there. No, boom, there's a setup there. Look how smart I am, right? That ain't the case. Okay. All this called beforehand. And it's liquidity, guys. It's just understanding liquidity and market structure. That's all it is. Okay. Because then I posted this chart, or I posted this setup right here. It came down. And as I just said, it took out low of day sell side. That's a key liquidity pool. We're fully aware that that is a key liquidity pool right there, that it took out significant sell side. And guess what happens next? We have a shift. Look right here. And again, this is another one on the candle close that I was talking about with my mentees on Tuesday right here. Highest high in the middle, lower high on the left, lower high on the right. Short-term high right there. It's formed. And then look right here, guys. Look at my cursor. 9:55, that 1 minute candle, it closes above that short-term high. See that? Right here, 9:56, closes. What do you got? You have a fair value gap confirmation. Three candles, 1, 2, 3. The top of the first, the bottom of the third, do not touch. And you also got that close above the short-term high as well. Confirmed. Market structure shift within the kill zone after taking out significant sell side. We still got the 4-hour drawn liquidity up above or up here. We got bias liquidity up here. And as I pointed out in chat, you could literally just get on. It's up to you. If you want to wait for the discount and do it like that, there's nothing wrong with that. If you want to wait on the premium discount, the 1 minute range, there's nothing wrong with that at all. But I'm showing you that the risk reward was already there. If you like it, if you want a good risk reward, if that's what you wanted to do, then of course you could already shoot for it. Now, if you just wanted to if you're looking for examples where you shoot for the high of the impulse move, then of course you need to wait for a discount or a premium. And what I mean by that, for example, the high of the impulse move would just be like the high of the shift. I know some people like to target the high of the impulse move and just be done with it, have that simple objective. And of course, in those scenarios, you would want to wait for the discount or premium. Because of course, the risk reward wouldn't be there if you wanted to do that. You would want at least a 1-to-1, right? So, but if you're shooting for this liquidity up here, for example, like the next key liquidity pool, basically, because this is the next key liquidity pool. What is that? That's New York highs. Also, I believe it is, it's high of day as well. So it's New York highs, it's high of day. We've already taken out low of day. Okay, we're in a deep discount. We got to draw liquidity up above being that imbalance. It didn't take out any higher time frame buy side right here either. And now you get a change in trend after taking out that key significant liquidity pool. And the risk reward is there. So if you got in on that candle close, like boom, right there. Okay. And then where would your stop be? It would be underneath the low liquidity sweep, or this is something where you could tweak it and do it suits you. You could do the underneath the fair value gap low as well, as ICT has talked about in his mentorship. That's another place you can keep your stop, is underneath of the fair value gap low. And you can see there's no other fair value gap in here. There's only one, so you could keep your stop there. Okay. If there's another fair value gap below that, well then of course you would treat it differently. Okay, your stop would have to be lower. But there's only one fair value gap in here, so you could keep your stop beneath the fair value gap low in this case. So if you did that, where would your profit target be? As I posted in chat right here, is a profit target that I had outlined, over 2-to-1. Right there, over 2-to-1. Did we just talk about another play that gave almost 3-to-1 just before this, guys? Think about that. Really think about that. That's two setups right there. 1% at almost 3-to-1, and then you have 2-to-1. You're looking at that's over 4R right there alone. So think, even if you could shoot for the low hanging objectives. I'm not saying, I'm showing the potential for both types of traders, whether you like low hanging objectives, whether you like big risk rewards. But if you like those big risk reward or bigger risk reward type of deals, well, think about it. It now takes over four losses to erode the profits that you already made off 2 trades, 4 consecutive L's. Think about that. It doesn't take, you don't got to have a high win rate when you're shooting for, and it happens consistently week in, week out. In this series already, I've already displayed that. I've showed you these setups. They're happening. It happens repeatedly. So when people say, the ICT 2022, the model doesn't work anymore, they changed the algorithm, that's bullshit. It works, guys. This shit repeats. It repeats. It happens over and over and over again. So that's what happens. Now, I believe this one actually was, an example where you actually did get the discount. Because let me see. Maybe it barely missed, if I'm not mistaken. Boom. I mean, just barely, though. You can see it actually just barely hit it. You can see right there, from the low to the high, it pulled back into 50% equilibrium. So that's where you could have your limit order, right at 50% if you want to do it like that. That's another option. Okay, again, as I was saying, there's nothing wrong with waiting for the discount or premium, as he talked about in his series. And you'll still get plenty of setups, plenty of setups week in, week out. And that is an example where it came down, hit it on literally the penny, and ended up ramping up and taking that buy side above, right? So what does it do next? So after we pull back into a discount, it comes up, it takes out that opposing buy side, aka high of day, buy side liquidity. And it comes all the way up and draws all the way up into that imbalance that I was just talking about a moment ago, that higher time frame 4-hour imbalance. It rebalances the first one completely, and then guess what? It takes out, or it taps into that second one. Okay, dokie. And then you can see it did all this. This is outside of the kill zone, all this stuff. So this is after 11 o'clock. So of course this is kind of noise, what you would consider just noise, and you'd be sitting out on. And then, but as you can see, guys, ends up selling back off, and that's what we saw. take place. But those were the main setups that we saw in ES on that particular day. We had that short setup, and then we had that long setup, and both had beautiful fall through right there, as you can clearly see. And that's what played out on it. See that? I think Nasdaq had a couple setups as well, if I'm not mistaken. So I'm gonna go pivot over into Nasdaq real quick, and we'll talk about that real briefly. All right. So we got Nasdaq here. We're going to talk about the price action on Tuesday, just like we just did with ES a moment ago. So we got a similar deal on the higher time frame chart here. You can see Nasdaq, it came down and it took out a higher time frame sales to liquidity right here. See that? Just like we had on ES, it took out a higher time frame level. That's higher time for liquidity, higher time for support. And also in the process, it left behind a bearish imbalance in here that's serving as a draw because it's an inefficiency in price. Okay. And then we also got, if you look right up above that, you got equal highs, then you got your buy side liquidity, your higher time for buy side liquidity right here. So it took down, and it took out this early on here in London, and it took out that higher time frame level right away. So we have these points of interest already noted. We're aware of it on our higher time frame chart here. Now we had a similar deal after the news on Nasdaq, and this one actually didn't have a quite as good fall through, and we're going to talk about it, okay, because we don't want to skip over that. So we had a similar deal here, as you can see, because it was ramping up. Right after 8:30, it comes up. We get the news on this particular day, and boom, it comes up and it takes out this buy side that it created. It's the same exact deal. It had that push up into that imbalance, and it had that retracement off that level of resistance. It created buy side liquidity right here, and then news, all that stuff happens. Boom, it comes up again because we want to implement time. It comes up, takes out that buy side, and then it does give the shift. It does give all the confirmation signals. It gives because right there, look, short-term low. Look how we got that strong close. Look how we got the fair value gap, and I was talking about this. Posted it in chat as well. Same exact deal. Gives a little light retracement to the imbalance, and it sells off. But this one, you could see, clearly didn't have as good fall through. It did not take out, New York lows right here, which is what I was originally looking for. I absolutely was. So what happens? Well, of course, ES at this time started taking out the lows and this thing. So ES is taking out the lows, right? And this thing is just kind of consolidating right here. It's just chopping. But also I want you to notice, it's also about to do this right before what? Or it's coming into, at this point, about to come to 9:30 equity bell. When you see something like this, it is not a bad idea to play good defense in bell. Okay, because I just told you a moment ago, like literally 9:30 is a key time where you will see fake runs. It's a key time where you're going to see turtle soups. And if price, because this isn't a good sign, the best place, study all your, study your winning trades. What you'll notice is the best plays, usually typically they go very quick. They're the plays that spend the less time and they go to profit target fairly quickly. They don't do a lot of this chopping crap like you're seeing on Nasdaq, back and forth, all the way up into 9:30 equity bell. When you see something like that and it's taking its time, and now you're coming to a key time like 9:30, where you understand it's going to be a key time for turtle soups, and you understand there's a big bucket of buy side liquidity up here, it's probably not a bad idea to bell. Not a bad idea to just play good defense and let the 9:30 move get done. Sometimes it's going to sell off without you, or it's going to go in the direction that you wanted. You got to be able to accept that. That's part of it, but it's never a bad idea because it's going to be hunting for stops at 9:30, and that's exactly what happened because it did not take out New York lows and ended up ramping up, and it took out that high right there. Now, again, it's into 9:30, which is, I just told you, is a key time for fake runs. It ramps up and it takes out this buy side liquidity that it just created. Right into 9:30, it takes it out, and it does what? Look at this. It completely rebalanced that 4-hour price action. That price action right there on that 4-hour chart is completely efficiently delivered. It's no longer an imbalance right here. That's resistance. It's going to serve as resistance. We saw that happen right here. And again, I plugged it in chat, talked about it in chat. We look for the shift now because now it's rebalanced its price action. And it doesn't have a reason to move higher right here in the short term, at least. Will later, which we'll talk about. But in the short term, it's already rebalanced its price action. So now it's going to want to do what? It's going to want to seek opposing sell side. It's going to want to seek opposing sell side liquidity. Okay? So again, remember, where's New York lows at? That's a key sell side liquidity pool. Look right here. We have New York lows right there. And of course, we already got, it took out higher time frame liquidity already. Remember that. We took out that in London session, which is what? It's a key time where you see your Judas swings occur. There's your Judas swing right there. And now you have it. Push it up at 9:30, fake run, rebalances the price action. You have your next key liquidity pool right here, which is New York lows. Remember, New York begins at 8 o'clock. And then right here, comes down. Look at this right here. Lowest low in the middle, higher low on the left, higher low on the right. Strong close beneath that level. fair value gap confirmation. Notice, look right here. There it is. Right there. 1, 2, 3. 3 candles, strong close, confirmed. You can literally go off the candle close if you want to. Okay, it's your call. And I said that as I said it in chat as well, because you could literally, if you got in on that candle close and you risk the high, because that's how you would do it. Remember the high of the fair value gap, if there's only one in here, like that in this example, or the high of the liquidity run. And then you could target the lows. This one did not quite as good risk reward, but it's still ample. Like it's 1.21. That's still, it's good enough. Low hanging objective type of deal. And that's what you see. That's absolutely what you saw play out right there. What if I don't like the risk reward? Well, then you just wait for a deeper retracement, of course. You'd wait for that premium. Like if you did get a premium in that case, which is probably around this area to say that, I mean, you're looking at really good risk reward. So it's that simple. You just wait for a deeper retracement. But if you want to go off the candle close and you like the risk reward, you're pleased with that, it's good enough for you, then by all means, there you go. There's a trade setup. There's your trade setup right there. And guess what? It takes out New York lows, which is your key liquidity pool. Now, may I remind you that this took out higher time frame sell side already in London session, aka a Judas swing. Pay very close attention because this is a very important detail because it all connects. You've already had that Judas swing in London session right here. This is that move lower in London session, aka your Judas swing. It made the low. It made the low in London session as it typically will on your typical bullish expansion day. And again, that low was formed from the Judas swing in London. And it's taken out higher time frame sell side liquidity, may I remind you. Don't forget, pay very close attention because this is important detail. It took out higher time frame sell side right here in London. Judas swing. It left behind an imbalance. And also notice how even on this push up right here, it did not take out any higher time frame buy side liquidity. Your next higher time frame buy side liquidity pool is all the way up here, guys. That's your next buy side liquidity pool. Yeah, and you got equal highs right here as well. So see what I'm talking about here, guys? Like it all connects. It all connects. So you got your Judas swing, right? You got your Judas swing right there. And then you get your expansion to the upside. Because when you have this scenario where you get your Judas swing and then New York, if you have that drawn liquidity up above, then New York's going to provide you with a nice retracement opportunity. And guess what? You even got the model, if I recall correctly. Boom, just like exactly right there. See what I'm seeing right here, guys? This is a market structure shift. You got the model on the 1 hour chart as well. See it? Can you spot it? Before I note it on the chart for you, where is it at? Where's that model at? Do you see it? So you can see we took out, look, now what do you want to see for a high probability shift in market structure? You want to see a key liquidity run, number one. You want to, of course, you want to see it crack a short-term high. But when it cracks that short-term high, you want to see the fair value gap confirmation, and you want to see a strong close above that short-term high. What did I just tell you a moment ago that we saw play out in London session? We got our Judas swing right here in London session. This is the Judas swing lower that took out a higher time frame level. That's what you saw take place. And then look right here on the 1 hour chart. After you took out that higher time frame sell side liquidity, you got a shift in market structure. Look right here. There's your fair value gap. 1, 2, 3. You got your strong, look right here, short-term high, closed above it. So we have this reaction on the 1 hour chart. That's a confirmed shift. Okay? That's a confirmed shift because it has all the signatures for a shift. That ain't a stopper and signature. You might be thinking, oh, it took out this short-term high, it took out this high right here, so why wouldn't I just go short now? Because you have to consider other things. You have to consider that it already took out higher time from sell side in London. So you can anticipate that that's going to be the low of day because it took out higher time from sell side in London session. There's your Judas swing. And it has the signatures for a shift, being that it has a strong close, being that it has the fair value gap. That's all the signatures for a shift in market structure. And then this is the exact model just on the 1 hour chart. Okay, just like we were talking about lower time frame, and this one it gave you a discount. And it looked right here, that move lower. See that? And if we go into a lower time frame, you can see that actual move lower. On the lower time frame was right here. That move lower right there that was taken out, New York session lows, on the 1 hour chart, that was a pullback into a discount right here. Remember, it's already taken out the sell side right here. Okay, and we're going to go over this as well because, because again, that's why you have to look at multiple time frames. Now, this is a very big lesson. Pay very close attention. Okay, this is another big lesson. This is where, you get these people, they'll take consistent L's, and then they'll go say, well, this model, it doesn't fucking work. Well, you don't understand it, because here's something that a lot of people are doing on Tuesday. I guarantee you, a lot of people, they went short on this push up into this imbalance right here. They saw it, but guess what? The move is already done. Look right here. Look at my cursor. When you got that push up right there into that imbalance, I guarantee you a lot of individuals went short and they thought that was the ICT 2022 model. They would look for low in prices. They were risking that high and they got taken. And they're like, what went wrong on this play? Well, again, it goes back to understand liquidity, understanding market structure. You already took out New York session lows, key significant liquidity pool, but you also literally prices already pulled back into a 1 hour discount and the market structure is already switched. So you literally got in front of, like, you're going against the tide. You're going against the trend at this point, and it's already ramping back up. It's already ready to go to the upside now. It's ready to draw to the opposing buy side at this point. You literally, let's look right here. Take your Fibonacci, because here was the move. Here was the absolute low to the high. And then we got them pull back into a discount right there. You could have got long. There's an example of it coming down to a discount, because, so as you can see, guys, you'll get plenty of examples for a discount as well. You don't have to go off the candle close. The candle close is kind of just something that, because again, this is a remix at the end of the day. It's not the exact way that he does it. It's how I look at it. And the candle close is something that you could implement if you like the risk reward, etc. But you'll still get plenty of discounts and premiums on the displacement range. This is a good example of that. See that right there? It pulls back into a discount right there. You could have got long. And you could have kept your stop underneath this low, or you could have kept it underneath the fair value gap low right here. That's the last fair value gap. You could have kept your stop right there as well. What would your profit target be once you got long in a discount marketplace? Because remember, it's only taking out higher time frame sell side. You got the imbalance. Well, you could take profit targets. You got a few options. You could just take the low hanging objective. In this case, being the high of the impulse move. Since you did wait for a discount in this scenario, you could shoot for the high in the impulse move. It comes up and it takes it right there. Boom. You could just be done with it. Just that simple, that easy, right? Or you could, of course, scale out, take profits here. And then where's your next liquidity pool? Well, you have these equal highs up above. Well, actually, you got the imbalance that's being rebalanced right here as well. That's not a bad idea either. You could take something off right there. Then you got equal highs up here. And then ultimately, you had the higher time frame buy side right here. That was that higher time frame buy, next higher time frame buy side liquidity pool. Because remember, we only took out higher time frame sell side. Now it's seeking opposing higher time frame buy side. And then again, look at this. Takes up the sell side, has the shift, pullback, retracement, continuation to take out the buy side. That was what we were looking for. And that's the setup, guys, right there. Discount marketplace. Okay? That's just a perfect representation or a perfect example of that setup. And again, that's another reason why, as I was saying, you have to understand liquidity. You have to understand market structure. You have to understand multi-time frame alignment, where you are in different time frames, because that's why this wouldn't hold up, because you're just getting in front of a freight train when you do that. And that's one of the big issues that I see with people that trade this model, is they don't understand that. That one thing that I just told you a moment ago, they don't understand that, and they'll get caught like literally left and right, because this is all that did. It created liquidity. It didn't have that pullback into a premium right here. If you went off the candle closing, you got paid. If you simply went off the candle closing, that scenario, you got paid. But what a lot of people want to do is they want that premium in this case, but it's already made the move at that point. It's already taken the liquidity at this point. It's already came down to a discount on the 1 hour range from that shift in market structure at this point, and it's now ready to move higher. And you get in front of that continuation. It's ready to move up higher now. It doesn't want to go lower. And it essentially just created more buy side right here on that push lower. And that was the intention. That was literally the intention right there. Why I did not have that pullback is it created buy side. It all connects. See what I mean? Then, of course, you get the shift later and comes all the way back down. And ultimately, though, you can see it took out that higher time frame buy side for you. And that's what we saw on it. All right. So back to the next example, which is on Wednesday for ES here. All right. So we're on a 4 hour chart again, guys. So we got that move lower. Okay. We got that move lower on ES. And because remember the other day, we ended up coming up, we took out those equal highs, we come to the imbalance and ended up selling off and finding resistance off that level. And it came down. So after we found resistance from Tuesday, as we were talking about in the previous example, this ended up selling off and it ended up taking out higher time frame sell side right here. And ultimately it took out higher time frame sell side right here, higher time frame sell side right here, and right here. That's a lot of liquidity. It's bearish. It's bearish market structure on the 4-hour chart, but that's a lot of liquidity that is taken out, as you can clearly see. Okay, so that's a lot of support right there. And then I have this 4-hour imbalance up above where you can see it found resistance. Real quickly though, let's go to the lower time frame because I want to show something. It already took out higher time, even like right here. Look at this. Look at my cursor. Let me actually just note on the chart again real quick. This is a higher time frame level too. Look right here. It's just, I have the 15-minute pulled up right now, but it's a higher time frame level on the 4-hour. See how we came down right here? Because here's midnight. There's midnight, and then we immediately sell off after midnight, and we come down, and we take out that higher time frame level, come into London session here. So you can see we get a little push up. Okay, I've talked about this in my how to anticipate stop runs video. It creates liquidity, comes down right after 3 o'clock, takes that liquidity right there, key liquidity sweep, ends up giving a lower time frame shift, and then it draws up higher, up into this. What I was just showing you a moment ago is the higher time frame imbalance. See that? AKA a level of resistance. And also you have that old low inside of the bearish imbalance as well, which is a very sensitive price point when you have it inside the imbalance like that. So it came up into that imbalance, it tested the old low, and it found resistance, and then it sells off further. Okay, go back to the lower time frame chart. But that's what happened first things first right here. That's why like this did not hold up. It's because you have a higher time frame imbalance right here. Yeah, it took out liquidity, but it's still bearish market structure, and it came up, it found resistance, it sold off. Boom. We already confirmed that. Okay. So we took out that level, and then we actually came down and we took out yet again another higher time frame level of support. As I was just talking about a moment, like that's a big level. That's a huge level right there. See that? And then it ends up pushing back up. And so you might be thinking, okay, so we're taking out a higher time frame sell side, right? Well, then I need to be looking for a lower time frame bullish shift then. Because like you were talking about with the other example, right? Like it's taken out that level of support. So now I'm looking for higher prices so you could pose and buy side. Well, you want price to confirm, okay? Because when you got this retracement right here off that level, because you might look like it's 930 equity bell. We're coming to, the actual equity open at this point. Market's open and it's pushing up. But here's the deal. Like it's still bearish market structure, okay? Now, I'm going to talk about the long setup that I saw on this in a moment ago. But here's a very important thing that you got to consider. We took out that liquidity, but it was still bearish. This is why this continued to sell off. We took out the liquidity. We had that big push lower, but is this the signature for something that wants to find support? We took out that low, but also it had fair value gap confirmation. Look right there. You got that 1 hour. Let me actually just note it so we're aware of it right here. You created a fair value gap on that push lower on the 1 hour chart. The 1 hour market structure is bearish right here. You're taking out higher time frame liquidity. You got a strong candle close beneath that short, like all the signatures that I've already taught you in regards to market structure, it's bearish right there. So then you can see it came up and did what right here? It pulled up to a premium marketplace within that range, and it found resistance, and that's why it sold off. And notice where it found its support at. What's that down below? You had a drawn liquidity down below as well at the same time. Look right here. You had that 4 hour imbalance down below serving as a draw. That had not been tapped into in the slightest. It was still there. It was still serving as a draw. So you're operating within a bearish market structure. Yeah, sure, it took out this liquidity over here, but it's not showing that it really wants to have any type of significant strength off that level, any type of change in trend off that level. It's still bearish. If it showed that confirmation, that's a different story, but it didn't. It didn't now, did it? No, it was still very bearish. So then we have that storyline coming into equity bell here. Okay, we understand we got that drawn liquidity down below. We understand the market structure is bearish, and that's going to serve as a draw right there. Now, there was actually a buy setup on this morning. It is technically counter trend trade, but again, I plugged it in chat. We were talking about it on Wednesday because in this particular, like we're going to be hunting here come 9:30. Remember, 9:30 is a key time where you want to be hunting for setups. So let's go to 9:30 real quick, because what's the deal at 9:30? What's happening right now? Well, remember, we've already taken out that liquidity. We're in a discount marketplace. We absolutely are. And we got these imbalances up above, as I was saying. Being that 1 hour, that's going to serve as a draw on liquidity. Okay? So now we're on a 15-minute chart, but remember, this, like, see where my cursor's at? I'm on a 15-minute, but this imbalance, do you see where my cursor's moving back and forth? That was that 1 hour imbalance that I was just talking about a moment ago. You remember? We were talking about that 1 hour imbalance that was in a premium marketplace in this range right here. Remember, it's bearish market structure. It is completely bearish market structure. And then we got this imbalance up above, serving as a draw on liquidity. Okay? And we've taken out higher time frame sell side. So we are, like, it took out significant liquidity right here. And when you take out a big significant liquidity pool like that, it doesn't mean it's going to be it does not mean it's going to be the absolute bottom, but it's going to likely want to do what? It's going to have some type of retracement off that level. Think of it like price is going to need to breathe. It's going to need to pull back, and it's going to want to do what? It's going to want to seek internal range liquidity. Because this is like when it's having this sell off right here, it's taking out these lows. What is it taking out where my cursor's moving? It's taking out external range liquidity. Think of like external, it's outside external. It's the absolute end of that range. It's taking that out. But once we take out a significant liquidity pool like that, it's going to want to do what next? It's going to want to seek internal range liquidity. It left behind a bearish imbalance, which is a level of resistance when price has tapped into it. But beforehand, it's going to serve as a draw on liquidity because it was not efficiently delivered. Okay, it's an inefficiency in price. And where there's inefficiency, there's opportunity. So we come down, take that low, boom. We take out that external range liquidity. And also, when is it doing it? Notice that as well. When is it selling off? Right at 9:30. Look how it connects. Literally right at 9:30 it does that. What did I tell you? What is 9:30 a key time for? 9:30 is a key time for turtle soups, fake runs. Now, of course, it's overall bearish and ended up selling off, but it's in a discount already. It's in a deep, deep discount. Okay. We have taken out that external range liquidity. We've left behind a imbalance that's serving as a draw now, and it's selling off here at 9:30. What do you think is going to happen here? And also, I want you to put yourself inside the shoes of a short seller who's already in this play. Where do shorts keep their stops at? Above resistance. Where's the next major level of resistance? Look right here. Highest high in the middle, lower high on the left, lower high on the right. There's a level of resistance. Clear as day right there. It's like a sitting duck. Okay, that's an area where price failed to move higher and before it sold off right down in the 9:30 bell. Look how perfectly this connects. Okay, and again, we understand there's buy stops there. We can anticipate that, and we're selling off here. It's looking very weak into 9:30, which is a prime time where you see stop runs. Okay, and we got that imbalance up above on the 1 hour chart. That's serving as a draw. We've already established that it's overall bearish, but that's serving as a draw on liquidity. And we understand it already took out external range liquidity. So now we have internal range liquidity. We have buy stops right here. We have it in a discount. It's at 9:30, which we're implementing time, which is a key time where we can look for stop runs, reversals. Look how it all connects. Like, I did not just go in, look for some old high or some random old high or old low, and then look for some little shift and then play some random shift. Look at like all that went into it, into understanding liquidity, market structure, and frame this entire idea. Like, it's very simple stuff. There's nothing complicated about this, but that's like, it takes more than just like, you need a little bit more to frame the trade. You got to have a full understanding of price action. And that's what I'm showing you right here. Because when you implement all of it, all right, your discount marketplace, your time, you're implementing liquidity, market structure, you understand all of it, it makes the perfect picture. And you understand why price is doing what it's doing here. Because now it's going to have that push up. It's going to want to take these stops. Because 9:30 is a key time where it's going to want to take those stops, drop into that internal range liquidity. And guess what? If you go to your lower time frame chart, you got the signature. Go to the 3-minute chart. Pull up the 3-minute chart, and yeah, you got it on the 1 minute as well, but it looks cleaner on the 3-minute here. Look right here. Now, of course, it was a little bit after 9:30, but you get the deal. It was moving lower into 9:30, and then it was moving lower. Bearish. Look right here. It's bearish market structure on the 3-minute chart. It's consistently putting in lower highs. It's consistently making new lows. It's selling off, and then boom, we get a nice big displacement to the upside. Fair value gap confirmation. Look right here. See that? Fair value gap right there. And then boom, we get our crack of a short-term high right here. Look at that. That's the signature, isn't it? It absolutely is. Fair value gap, close above that high. There's your displacement. It's within your kill zone as well. Okay, it's before 11 o'clock, as you can clearly see. Take your Fibonacci from that low. This is yet again another example that did give you the discount. You'll get plenty of examples with discounts. And even optimal trade entry. Right there. See that? So here's the deal. It does that, and it pulls back into a discount. There's your opportunity to get in. It comes down, it tests the bullish order block on the 3-minute as well, finds support, and then it ramps up, and it does what? It ramps up, and it draws up into a premium within that 1 hour price range right here. It's just displayed on a 3-minute chart now. That's that 1 hour price range. It pulls up Fibonacci from high to low into a premium marketplace where it takes that buy side that I was just telling you about. Remember, we had buy stops right here. And it's right at also at the entrance of that 1 hour imbalance, which is going to serve as resistance. But it was serving as a draw beforehand. But now that it's tapped up into it, it's bearish market structure. It's in an expensive marketplace. It can now move lower and draw to the 4-hour draw on liquidity down below that we already framed beforehand. It all connects. Okay. Now, if this came up, now this is very important. Pay very close attention. If this came up right here and it did not give you a setup and it immediately ramped up into this high right here, took out that buy side, and it came up into a premium, would you be interested in grabbing it as it came back down the next time around? You wouldn't, because what gives this trade validity is the fact that you got that draw on liquidity up above. It's the fact that you got these buy stops right here, the fact that it's in a discount. That's what gives it validity, and that's where a lot of people go wrong with trading this model, is they grab the pullback when the move's already done. It's already taking out the liquidity. It's already rebalanced that price. It's already moved up to a premium, so of course you're not going to get the good fall through. The move is already finished with. But in this scenario, you got this pullback into a discount, and you still got that draw on liquidity up above. You still got the buy side up above. So it's still a valid trade idea because you got that liquidity. It's serving as a draw on liquidity. So it's still intact. And that's why you got the fall through that you did. And the times that you don't, well, it's typically because that liquidity has been taken. The times that you don't get good fall through. So that's why it's very, very important that you have a full understanding of liquidity, full understanding of market structure, premium and discount, etc. Because that's going to frame your trades. And then you can see it ends up coming up to a premium. It finds resistance, and then boom, you get your, that's, of course, that's outside the kill zone though. It gives the candle close, the fair value gap, and then it draws lower, takes out the low, and draws all the way down into the imbalance right here, where yet again, you get the lower time frame shift, and it seeks opposing buy side. It repeats. It's back and forth, back and forth. It's from one liquidity pool to the next. And it just comes down to having a firm understanding of market structure, liquidity, etc. All right, but I think that about covers the video for today. Hopefully you enjoyed, got some value out of it. If you did, leave a like, subscribe to the channel. I'll catch you later.